As you can see here on my Tuesday trade, we created this range on the 15-minute time frame. We SFP'd from the low, and at the same time we created a W pattern / double bottom. Alerts were set on the SFP line at the bottom, and patiently I waited for the price to hit my alert to then alert my phone, which then alerts me. Once I got that alert, I then waited 5 to 10 minutes to let the price develop at the zone of interest to see if we would either break down successfully or get acceptance back above the lows, creating a swing failure pattern / failed auction / fake out. If we get what we wanted, the acceptance back above the low, we know there is a high likelihood that the price will hit the highs as demonstrated in the slides to come. Overall, this trade was a nice swing failure pattern setup for a risk to reward ratio of 1 to 3 within an hour or two. This trade was entered on the second. This is the same trade, by the way. It was entered on the 5-minute candle close above the SFP level, and I targeted the previous point of control that was in confluence with Tuesday's, the day this trade was taken, value area high. It hit my take profit order 4 hours later, risking 1% at $1,000 per trade. Risking 1% at $1,000 per trade would have made you $3,000 in 4 hours. A day later, on Wednesday, 9 hours later to be exact, I hit this nice break of support setup. As you can see, price wasn't able to break higher past the wave 1 lows as annotated, as well as not being able to successfully break above and hold my previous take profit level at the previous day's point of control and Tuesday's value area high using the SVP. As the price continued to roll over back into the range, I noticed this exhaustion in momentum to the upside, and I identified my key support level as shown by the green box. The reason I identified my support as where the green box is because of the first lows that were created after the pump to the top of the range. I had my alerts set, as you can see on the right, just at the green box, and as I saw that we couldn't hold the support any longer, I entered my short. My stop loss was set to above the highs with enough breathing room to not get stopped hunted, like how you can see what happened halfway through the trade. Shortly after that liquidity sweep / retest of previous support, now acting as resistance, the price came down to my take profit level at my previous SFP level line, swing failure pattern, that is. I could have targeted more, as you can see, but as a trader, you should be happy with a 1 to 3 because that's very good. On to the next slide. The next trade. This is 3 trades in a row, back to back. An hour later, I realized as we swing failure patterned from the previous SFP level that I was just talking about, we could then move to the next level of the range, which is the top of it, as we were already at the bottom. So I jumped back into a long with my stop loss below the lows and my take profit at the highs of the range again, where it once was before on the Tuesday's trade. This is Thursday's. As you can see, price nearly hit my stop loss, but because I gave it enough breathing room, I wasn't stopped out, and my full profit was hit. Take profit was hit at another 1 to 3 risk to reward ratio, meaning I am up a total of 9 RR from Tuesdays, Wednesdays, and Thursdays trade. However, on the Monday, I did lose one trade at 1 RR. So, an overall 8 RR for the week, and more to come. It took this trade to hit TP nearly one whole day at 21 hours. So, a pretty, long trade, day trade, but you just let it play out and look what happens.